Hi, this is Nick Poller, and I'm going to go over our most recent risk metrics report, All Quiet on the Global Front, Internals Hidden at Limited Contagion. So this is our quarterly report that goes over our risk measures across the world, primarily looking at our measures of risk aversion, risk-taking, risk appetites, as well as market polarization or crowding. So kind of, taking the title, All Quiet on the Global Front, Internals Hidden at Limited Contagion. What we see here is a chart that kind of summarizes on the y-axis the market polarization. The higher, the further up you go on the y-axis, the more polarized markets are, which we define as the valuation premium of momentum stocks versus the broader market. And then on this x-axis, we have risk appetites. As you go further to the right, you have more risk-taking behavior. As you move to the left, more risk aversion. And so from a risk aversion, risk appetite perspective, only Japan is at an extreme with a risk appetite z-score of above 1. Everything else is broadly within historical averages. Europe, India, LATAM kind of approaching an interesting area where there might be opportunities. And then as far as polarization, Canada is at extremes, but really most regions are broadly in range of historical averages or quite low. This contrasts very markedly to the extremes that we saw over the past few years, first with extreme risk aversion as the pandemic began, and then extreme risk-taking behavior as we saw first the extreme stimulus and then later the reopening. Similarly, we saw periods of extreme crowding, which have since tailed off. This chart here looks at the polarization disaggregated across different regions. The yellow triangle represents risk, represents market crowding 3 months ago. The pink diamonds represent the current z-score. So what you can see here is that, yes, markets have become more polarized over the past 3 months, broadly speaking. There are a few exceptions, so LATAM, the U.S., but broadly speaking, we have seen the valuations for momentum stocks increase. However, only in Canada does it approach kind of the warning level of 1 standard deviation. All the other regions are in line with historical averages. Finally, in this edition of the report, we took a look at the impact of the financial turbulence that we saw in the regional banking of the United States. One way to look at the kind of global impacts was looking at credit spreads. You can see here that partway through the month, credit spreads did increase pretty significantly among emerging markets. So this is LATAM and Asia. However, the credit spreads, high-yield credit spreads, are still much lower than what we saw, in the fall, as some serious concerns regarding recessions were being talked about. In the U.S., not much movement. If you look at the industry high yields for, say, banking, yes, you can see more movement there, but in aggregate, much less of a move. And finally, on the left, we have a scatter plot comparing financial sector performance versus the broader market. This bottom right box is kind of the cautionary box for us, where the financial sector underperformed the broader market in these regions. So Switzerland, U.S. large caps, Japan, Mexico. Top right, maybe a little bit less reason to concern about financial issues, issues stemming from the financial sector. So this would be Europe, China, India, and then in the UK we saw a setback for both the market and financials. So that concludes this overview of the most recent risk metrics. Once again, this compressed chart where risk appetites and crowding that were really all over the place over the past few years has become much more normalized. Still, certainly many areas to look out for, but we are kind of past those extremes that we saw during the pandemic. Thank you.